This is Dan Dicks here reporting for Press for Truth. We've got a lot of information to cover in today's video, guys, so let's just jump right into it. I wanted to show you this. Russia and China officially announced a new global reserve currency. That's right, China and Russia are now taking their shots directly at the US dollar. It shouldn't be any surprise to those paying attention that Russia and China are strengthening their economic ties amidst continued Western sanctions on Russia as a result of the country's war in Ukraine. But what may surprise some people, however, is that Russia and the BRICS countries, including Brazil, Russia, India, China, and South Africa, are officially working on a new global reserve currency. Here's what Vladimir Putin just said at the BRICS Business Forum just last month. He said the issue of creating an international reserve currency based on a basket of currencies of our countries is currently being worked out. So this is huge when it comes to Russia and China challenging the US dollar's global reserve status. Meanwhile, Zimbabwe is now debuting gold coins as legal tender in an effort to stem inflation. Zimbabwe has launched gold coins to be sold to the public in a bid to tame runaway inflation that has further eroded the country's unstable currency. This unprecedented move that was announced today, by the country's central bank, the Reserve Bank of Zimbabwe, is to boost confidence in the local currency. Trust in Zimbabwe's currency is low after people saw their savings wiped out by hyperinflation in 2008, which reached 5 billion%, according to the IMF. 5 billion%. That is just insane. And so now they are putting their focus directly on gold. And interestingly enough, in 2022, gold has held out better than Bitcoin. It has been doing better than a lot of the major tech companies, who are all down anywhere from 30 to 70%. And now you have Zimbabwe looking to gold as a hedge against inflation. And I actually happen to think they're correct. I think this is the absolute right move. And joining me online right now to talk about all of this today and much more is David Garofalo. He's the CEO and president of Gold Royalty Corp. GoldRoyalty.com is the website. Sir, thank you so much for taking some time once again to join us here at Press for Truth. Now, I want to talk about these important world-shaping events that really could potentially shape the global economy. And I want to get your views on, Zimbabwe choosing gold as a hedge against inflation. But before we get into that, when it comes to this idea of Russia and China working on a global reserve currency, do you think something like that could actually rival the dollar? And if so, what would that mean for gold's potential?
Well, the interesting thing is it's not a coincidence that Russia and China are not only the biggest producers of gold in the world, they're also the biggest consumers of gold in the world. And their central banks have been rapidly diversifying their central bank reserves into gold. In fact, none of the gold that those countries produce leaves their shores. It gets consumed internally, largely by the central banks, by consumers who are looking to diversify into gold. So effectively, what they're looking to do is create a gold standard within those countries backed by gold in order to create that reserve currency that you're talking about. Yes, the US dollar is currently the global reserve currency, but it's also backed by the largest gold reserves in the world as a country. And Russia and China see that and see the utility of gold in achieving that reserve currency status.
Well, we've seen what happened in places like Sri Lanka when this just completely runs completely out of control. And now today, Zimbabwe is announcing that they are going to start selling gold coins to their population to kind of stave off runaway inflation. So what are your thoughts on that? Would you agree that that is a good move? And more importantly, do you think this might create some sort of a ripple effect to other struggling nations who might decide to do something similar?
Precisely. I think we're seeing inflation unlike what we've seen for 50 years. We haven't had a large inflationary cycle since the 1970s. We're seeing the collapse of many fiat currencies in the world, not least of which are the 8,000 cryptocurrencies that have been introduced into the world with no physical backing whatsoever, no intrinsic value. There is a reckoning that's happening across the world, not only for government-created currencies, but for free currencies generally, like cryptocurrencies.
Well, right now, with today's gold price kind of averaging, around the mid 1700 range or so, is mining still profitable in North America? I mean, what's the cost of production on average?
Well, that's gone to well north of $1,000 an ounce, and it's rapidly accelerating. And that's the dilemma that mine producers are facing. While the outlook for gold is as bullish as it has ever been, given the collapse of fiat currencies, given the fact that gold is held value much better than virtually every other asset class in what's a bear market currently, it's likely to accelerate going forward. Mining companies are faced with the prospect of rising input costs. And we saw that this morning with Newmont stock going down well over 10% on a re-guidance of their costs for, I think, the third time this year. And we're likely to see that phenomenon repeat itself time and time again as second quarter results come out over the course of the next several months from a variety of producers in the space. That's why after 30 plus years of operating and building mines in my own right, I've decided to go into the royalty business, because I do believe in gold as an asset class. It's likely to gallop in this inflationary environment for the foreseeable future. But I want my shareholders to be insulated from input cost inflation. So what we provide is that top line exposure. We get a percentage of the revenue, but we're completely insulated from operating capital cost inflation that our operating partners are going to have to manage going forward.
Well, I wanted to get a follow-up on you with how things have been going with gold royalties since the last time that we spoke. But before we do, are you surprised at all right now, personally, that gold isn't currently priced higher than it is?
Well, yeah, certainly, I would have thought that it would run much more aggressively than it has up to this point, but I still believe that's going to happen. At the outset of an inflationary cycle, even as nominal rates are going up, as they currently are, what history has demonstrated to us is gold takes a couple of years to react. It holds value very well. In the last big inflation cycle, as Paul Volcker, who was the chair of the Federal Reserve at the time, was raising nominal interest rates, gold didn't really peak for at least 2 to 3 years. And that's what we're likely to see going forward. The difference in this cycle versus the last one is while we have inflation as we did back 50 years ago or 45 years ago, what we also have is massive amounts of debt, far in excess of what we had in the 1970s. The average debt to GDP today is over 325%. It was only 100% back in the late 1970s. So Paul Volcker could raise interest rates to his heart's content in order to tame inflation. Federal Reserve, central banks globally do not have that kind of latitude. They can't do that without bankrupting governments, bankrupting companies, and bankrupting individuals who've strapped on massive amounts of debt in order to finance the acquisition of inflated assets.
Do you have any crown jewels, so to speak, in your royalty portfolio that are currently outshining all the others?
Well, we have almost 200 royalties within our portfolio. We've grown very, very rapidly in the year and a half since our IPO, from a modest start of about 18 royalties to now just under 200 royalties. But we have quality. It's not just quantity. We have a royalty in Canada's biggest producing gold mine, Canadian Malartic, and more importantly, its underground extension, which Agnico Eagle and Yamana are now expanding with an investment of $1.6 billion. We also have a royalty on what's going to be Canada's second biggest producing gold mine, Côté Gold, which will come into production late next year, owned by IAMGOLD. And we also have a royalty on the underground extension of America's biggest producing gold mine, Goldstrike. And that underground extension is called REN. So it's, again, not just about the optionality that 200 royalties offer. We're talking about multi-generational, multi-decade assets, quality assets with quality operators in the best jurisdictions in the world that provide that foundational element to our story. And we have such strong cash flow and such strong cash flow growth. We introduced a dividend only 10 months after our IPO, and we're yielding close to 1.5%.
That's amazing. And on top of all that, right now, as we kind of started this interview off with, this is all happening in the midst of this talk of a global reserve currency that might rival the dollar. And, we got Zimbabwe announcing the idea of gold being a good hedge against inflation. If these things start to catch on, this could be incredible. So having said all that, what's next for you guys at Gold Royalty Corp?
Well, all we have to do is let our existing asset base mature. We have 8 producing gold royalties. We have another 20 in various stages of development and construction, which underpins 60% compounded annual growth in our revenue each and every year for the next 5 to 10 years. And that underpins a significant growth in cash flow per share, which gives me the confidence to say that I believe that we're going to be able to increase our dividend over time as that we start to realize that cash flow growth. And that's very, very exciting for our shareholders.
Well, I think most viewers of this channel are well aware of how good of a hedge gold is against inflation and potentially hyperinflation, like 5 billion% in 2008 in Zimbabwe is just mind-boggling. But if you take the right moves and you position yourselves before these types of things happen, you'll turn out just fine. So what's the best place for people to go right now online if they do want to get involved with you?
Well, goldroyalty.com is our website. You can sign up for our newsletter. We have a 1-800 number if you'd like to talk to somebody. I quite often return calls to shareholders myself and be delighted to talk to you and tell you about our story. I think we provide tremendous value because we're listed on the NYSE American. It's been a baby and bathwater type of market where we're in the midst of a bear market, and our stock has been severely discounted like every other equity on the NYSE. We're trading by consensus estimates about 0.5 times the underlying net asset value of our business, which means as we get back to where we were prior to this correction, as gold price starts to accelerate and gain some momentum, we're looking at least a double in our stock price getting back to those historic multiples. And so that's very exciting for our shareholders that are just entering the space. And you're paid to wait. Again, with a 1.5% yield, you're paid to wait for that to be realized over the course of the next months and years.
Yeah, that is awesome. It's such an exciting time and a good time right now, timing wise, with gold's potential moving forward, especially with all the crazy things going on in the world, and especially the fact that it's pretty much on discount right now. So guys, I really want to encourage you to check the links in the description, do your due diligence into this stuff as well. But then check these guys out. And once again, I just want to thank you again for kind of joining me here again on Press for Truth to help us kind of understand the ebb and flows of this precious metal space in these crazy times.
Thanks, Dan. Thanks for having me on.
Yeah, take care. We all want truth. The truth will set you free.